Right now, though, it's time for the big fat idea. Very pleased to welcome back to the show Brent Woyak. He's portfolio manager with Canaccord Genuity Wealth Management. Brent, I really appreciate you finding time for us. And as you know this section, let's just get right to it. What's your big fat idea?
Good morning, Mike. Thanks for having me on the show. What we're looking at right now is a buying opportunity in life insurance companies.
Let me just reverse things a bit. Okay, so life insurance companies, who is this for? Who should be listening to this? What kind of, with their investment goals?
Conservative investors looking for long-term growth and income.
Yeah, you must feel like you have to be a detective these days. I mean, it just has changed the whole investment world. It was used to just save your money, buy a long-term government bond as you come into retirement and live off the interest. Of course, that is literally impossible. Just talked about Japan trying to guarantee zero at best on their bond, 10-year bonds. So what kind of things are you, when you were looking? I mean, this is a kind of blueprint that you're looking for all the time, I would assume. But what do you see in the life insurance companies?
Okay, let me give you 4 key points here that we've been looking at. First, in terms of valuation, Canadian life cos are trading at their most attractive levels since the 2008 global financial crisis. The shares are cheaper than the banks, the market, and other defensive yielders.
Yeah.
Second key point, even though the shares have declined in the past 12 months, the dividends paid have actually been increasing, making the current yields the highest we've seen since 2012. And third, technically, the price trends have been turning bullish, and we're seeing a positive shift in relative performance in favor of the Canadian life cos compared to the Canadian banks. And lastly, yield curves we've noticed lately in the global bond markets have been steepening, which means that we may have seen the low in interest rates, possibly. And if interest rates begin to rise, this will help to boost the earnings, cash flows, and dividend yields of insurance companies going forward.
It's fascinating, the comparative comparisons you're making with the banks. That's very notable. I mean, are you seeing similar kind of risk, if you know what I mean, or safety, let's call it instead, between the life insurance and the banking sector?
I mean, obviously they make their money in 2 different ways. So, we have had a big run-up in the housing market, an increase in the amount of mortgages, outstanding. So the Canadian banks have had a good run, but maybe, they become more expensive relative to the life insurance companies. Sure.
Okay. As I say, that's a fascinating idea. When you said dividend yield, Brent, very quickly, what kind of, what should we be looking for? Is it a 3%, 4%, what?
Well, if you buy some of the individual stocks, you can get, in Canada, you can be getting over 4% on a few of the major companies right now.
Is that how you're suggesting sort of investing in this approach?
Yeah, so while we would normally be buying the individual stocks in our client accounts, I think for your listeners, the best way to gain exposure to this sector is through the First Asset U.S. and Canada Life Co. ETF.
Can you give me a symbol quickly?
Yeah, the symbol is FLI, and it trades on the TSX, closed at just over $11 yesterday, pays quarterly dividends, and it yields just over 6% per year.
Great stuff as always, Brent. Nice to chat with you. Brent Woyak is portfolio manager with Canaccord Genuity Wealth Management in Vancouver. I'll be back. You're going to be fascinated with this. Plus, I got a quote of the week.